Hello, and welcome to Vancouver CRE Market Channel. On this channel, we'll be talking about residential and commercial real estate in Vancouver, and I'd be using data science techniques to dig a little bit deeper into the data that we see. Today, however, we're just going to go over the market reports for month of October. There's a lot to unpack, and I'll make sure to make another video digging into the data for better insight into it. As you can see behind me, there is there's my website that will come live soon, and this is just a sneak peek preview of it. So now let's get into the market report. Buyer demand surges in October. So as you can see, the Greater Vancouver Realtors, this is a monthly report they put out, and they are saying that there is a 31.9% increase from the sales in October 2023. So comparing October 2024 with October 2023, there's a almost 32% increase. This, however, is still 5.5% below the 10-year seasonal average. But due to the past few interest cuts, it looks like that a lot of buyers who were sitting on the fence, they feel more confident to get into the market, and they're feeling that this is signaling the bottom of the market. So it's a good time to get into the market and make those offers. This is a very useful table, by the way. It shows for the different areas, it shows the percentage change in prices for different intervals. And so we're going to look into some of these neighborhoods. So starting from Vancouver West and Vancouver East, as you can see, the column 1 month change is this one. So it shows it's still 3% below the last month prices. However, in Vancouver East, it shows a modest gain, 2.3%. Then we're going to look at the 3-month change and 6-month change. Again, Vancouver East has been recovering modestly, whereas Vancouver West still losing on the prices. Also, the other thing you notice is that the 10-year trend, Vancouver East is twice as much as Vancouver West. That means Vancouver West is becoming unaffordable for people to get in, and it's hitting a ceiling in a way, whereas compared to Vancouver West, people are moving into Vancouver East and have a bit more money to spend, so Vancouver East has seen some appreciation. You could also see that in different market segments, like Maple Ridge is showing 167% increase in 10-year average. So is Squamish. Squamish is showing 169% increase. So the markets that are more affordable or have been more affordable have realized significant gains, whereas markets that have been less affordable compared to people's income, they haven't gained as much. That's something to bear in mind when you are thinking about long-term investment for a home that you would like to live in, and where to make those investments in. Obviously, this also depends on other factors like your work, family, roots, and whatnot, but it's good to bear that in mind as well. Now, looking at the townhomes, again, Vancouver East and Vancouver West, we see there is modest gain in both markets. Again, I think it has to do with affordability, and the more affordable it is, the higher the gain looks like. So that's Vancouver East and Vancouver West. We could also look at Burnaby North. Again, there is a bit of price decrease in 1 month change and 3 month change, but in 6 month change and 1 year change, Burnaby North is making a return. North Vancouver is seeing positive change in 1 month change for townhomes. However, if we go back to single families, North Vancouver is showing 3.4% decrease, while Burnaby North is showing minus 0.1% decrease. And in apartments, Vancouver West and Vancouver East, here we go. They show a little bit of a decrease in the apartment sectors, probably because of the supply issue. So a lot of products came to market at the same time, creating oversupply, and the price is going down a little bit. Now let's have a look at a couple of charts. This chart shows the home price index over time, and it's starting from October 2019 to October 2024. And as you can see, based on the home price index, townhomes are showing a little bit of price increase, while the detached homes and apartments are nudging down a bit, as well as the the average total residential. On this slide or on this page, you'll see the sales facts, and it shows the median sale price for different components for different cities in October, September, and compared to October 2023. So let's have a look at a couple of these areas. So for instance, Vancouver West, in the detached market, the median price has been 3.3. Vancouver East is 1.84. Richmond is 1.86. North Vancouver is 2.15. West Vancouver is 2.847. And for attached, as you can see again, you can actually compare that with October 2023, and you can see that Vancouver East in October 2024 is 1.84, whereas Vancouver East was 2.45 in October 2023 for detached. For attached, now it's 1.480, whereas it used to be 1.402. So about $80,000 of price gain in the attached market, and with apartments, there's a bit of a price drop in Vancouver East. And you can see it for other areas as well. Feel free to pause the screen and have a look. And these are, again, sales fact for some other neighborhoods. And going to this famous graph that I'm sure you have seen in the past, as you can see, the prices have come down a little bit from, say, 2021 high. And so we'll see how it goes. But this is the detached homes. The red is the attached. And as you can see, the attached pricings is nudging up a bit. So is the case with apartments. So where will the market go from here? It all depends on the very simple supply and demand economics. And as you can see, we have some charts to look at. This one is Canada's population. Population has been growing due to immigration mainly, and the growth in population that we've had is now stalled. Canada's population for next year is not going to increase, and so the demand from population will be less. That means less units to be rented out, which affects the units that investors usually invest in to get the rent from. And so some resale units will see that effect. especially the smaller apartment buildings that are usually meant for international student and people with work permit. The other factor that is important is the unemployment rate. If the unemployment rate goes up, people are more cautious in their big purchases, specifically buying a house. They are afraid of the economy and layoffs and things of that sort. So the unemployment rate bears on the real estate market as well. So as we can see, the unemployment rate is nudging up since 2023. It's going up and up from 5% to now 6.5%. The good news is it came down from 6.6% to 6.5% in September, but we are still not quite safe with regards to unemployment rate, and people are cautious. The wages, again, that plays into the purchase power of people, and the wages seems to be coming down a bit. So while there has been growth for wages in Canada, we're seeing a little bit of a dip. This is not a huge concern at this point because obviously there's ups and downs in the numbers as months go on, but the trend seems to be positive, and especially because of the population growth being stalled for the next year. You could conclude that there will be a bit of a growth in the average hourly wages in the economy. Now, the inflation rate is very important. That sets the tone for interest cuts. And when the inflation rate comes down to below 2%, the Bank of Canada starts to feel the pinch and brings down the interest rate, overnight interest rate, which means lower variable mortgages, and people gain a bit more confidence in the economy. So that plays a little bit into the demand for more housing. Now, looking at the supply side of things, looks like the value of building permits are coming down. That means basically we have less supply in the market, and actually this is the permit, so by the time it's built, there's a bit of a lagging indicator. This one is, so we don't know what immediate effect it's going to have in the market. The immediate supply is the number of completed units in the market, which unfortunately I don't have that data for today, but looks like we're going to see a bit of a surge in supply for a little bit. Now, looking at the gross domestic product per capita, PPP, which is purchasing power parity, this shows that the GDP per capita PPP is coming down a bit, which means Canadians are making less money. Now, purchasing power parity basically is a concept that tries to compare countries based on the prices of goods in those countries. So, for example, the GDP per capita in the U.S., which is usually used as the base for the PPP calculation, the rent in the U.S. compared to rent in India is significantly different. So the GDP per capita PPP for India takes that into consideration to balance it off. So the purchasing power is considered rather than the actual money they've made. In other words, it is compensated. The GDP per capita is increased by a factor which represents the price of goods in India being cheaper than the U.S., for example. The last chart we're going to look at is the Canada GDP growth. And as you can see, the GDP growth in end of second quarter was 2.1%, and end of first quarter in 2024 was 1.8%. So we're going to have to see what the GDP growth is for end of third quarter, and that would also play a role in confidence in the economy and housing prices. So again, it's hard to say where the market will end up to be, but it looks like from the October numbers that buyers, there's a pent-up demand. There are buyers that are sitting on the fence. Also, there are sellers that have been very patient, not willing to sell their homes at a lower price. And so that has created a higher transaction numbers in favor of the sellers in this case, because there are more buyers coming into the market than sellers for at least the attached products. And with a bit of a interest rate cuts that people are predicting for the next announcements, it looks like that the market will find its way towards a seller market. So it's time to get into the market if you were sitting on the fence as a buyer. And if you're a seller and you've been very patient, wanting to come into the market, it may be the right time for you to come in the market as well. I'd be happy to help you out if anybody needs help in that regard. You can email me. I'll be sure to get in touch with you. All right. Thank you so much for taking the time to watch this to the end. I appreciate your comments as well, and let me know how I can help. Thank you, and see you next time.